Right, sprinters, welcome back to the live Q&A session. If you're new to this channel, this is about revenue systems and investment systems, how you can create repeatable, reliable revenue systems that bring money in, how you can collect that money in terms of profitability, and how you can keep that money by investing it, because you might create a lot of money, but if you cannot keep it, it's just gone. Hey, Johan. So, thank you for your questions up front. I will start immediately with some of your questions that you brought, and also feel free to put your questions right now in the chat. I will pick them up as we go. We will have a look at the markets, what's going on in the markets, what's going on in the worlds. We will talk about Bitcoin price prediction and Bitcoin long-term, hedge against inflation or not. We will talk a little bit about the stock markets. We will talk about segment rotations, and of course about the war going on, and how all of this affects your portfolio. Say, brother, Johan, great to have you here. So, and you have already a first question. Let's go. Bear market. Yes, but it depends, right? So the Nasdaq is in bear territory, not the cryptosphere. Let's go there. So let's start with your question about the bear market. Then we go to your next questions about staking. So does this look like a bear market to you? It depends, right? So on top here, I have my defensive plays, which are right now silver, gold, Bitcoin, the strong blockchains, the few strong horses in the blockchain world, and the few strong horses in the stocks world. Those are all doing fine. Then we have the general Nasdaq. As you can see here, they're doing even more than fine. We have silver up 8%, we have gold up, and then comes Bitcoin. Bitcoin up 1% right now, but with 43,000. We have been testing the 46,000 level, which was a resistance level that we have tested many times. So guess we will hover between 46 and 35 a couple more times before then we see the next breakout. And we will talk about Bitcoin price predictions in a second, because Jane asked about it. And I have prepared something to answer her question. So Bitcoin, 43,900, and looking very strong. And the interesting thing, because you ask bear market, bull market, the interesting thing is November until 3 days ago, Bitcoin was in lockstep with the Nasdaq. So 1-to-1, having the same pattern as the Nasdaq, and that changed exactly 3 days ago. If you look at the Nasdaq, Amazon, Tesla, Google, which is basically the Nasdaq, right? And Apple, add Apple and Nvidia, and you have 10% of the Nasdaq. So Nasdaq is down 3 days. Same time, Bitcoin and the strongest altcoins up. And by up, we have some of them up 82% this week, like Luna. And so bear market depends on the segment. From now on, we have to talk segment and segment rotations. This is what I will focus more on over the next weeks to show you guys some segments. This is the commodities segment, silver and gold, up. We have another segment which is up. It's the industry segment. Defense is up for obvious reasons. If you look at Lockheed Martin, it had, I think, 7% up in the last 2 days. Then we have other segments that are up, like fertilizers. I bought 3 fertilizer stocks, fertilizer producer stock, because we have to prepare for three cases, right? Bull case, base case, bear case. And I think this year is the year to prepare for bear case. I'm still in base case, but my base case is 20% real estate, 35% stocks, 35% cryptos, and the rest is cash. So in those stocks, I go with segments. Segment rotations happen regularly. And right now, segments that are in a bull run, commodities, energy, defense, and those 3 days crypto. And all other sectors, especially growth stocks, tech stocks, down. Little bit less down dividend stocks because they are seen as risk off versus growth stocks seen as risk on. So people are moving right now from risk on to risk off. And of course, smaller altcoins down like Vox, DVPN, AKT, Secret, etc. Of course, they're down. And even the big NASDAQ, the strongest NASDAQ horses, Google, Amazon, Tesla, Square, down, Nvidia, down. I've been buying more Nvidia, by the way. I will be selling Coinbase soon. And I have to sell Luna because it doubled. I don't like to do it because I like Luna, but my system says sell at 98, and we are today at. Let's check Luna. Let's check Luna. Go Luna. I have to sell today, and I tell you I'm not happy about that, but I don't go with emotions. I go with my system. And my system says I have to sell at 98. Let's check the current, because it was at 96 when I last checked. Let's check Luna right now. 93. So I might sell maybe tomorrow or in 2 days when it hits 98, because then I have doubled, and my system says whenever you double, put your initial money off the table and go enjoy the rest risk-free. So, and when it doubles again, I will sell 25% of that. And when it doubles again, I will sell 12.5%. You get the system, right? So whatever system you have, stick to your system. This is my system. Systems, remove the excitement of crypto for me. Yes, now it is calculated rather than guessing. Exactly. Well, it's still guessing, but it's a de-risked form of guessing, right? It's guessing with discipline. You set up assumptions, you set up entry prices and exit prices. When they hit, you buy. When they hit, you sell. And so, but you are constantly validating your hypothesis. That's the important thing. We are all still guessing. That's the exploratory method. It's the scientific method is guessing, but in a disciplined way. Einstein is guessing when he says E is mc squared. It's a guess, but you write it down and then you invalidate it. If you cannot invalidate it, you have validated, and when you have validated it multiple times, it becomes a theory. And if it works, then in every context now, it is something. So that's still guessing. Thank you for your advice and fantastic system of how you do your trades. Yeah, this year will be much harder than last year. Last year, whatever we would touch would 6x. It was incredible. This year, we will have bear markets, segment rotations, possible global conflicts. So there is stuff going on. I'm a bit, of course, it's terrible what's going on in the Ukraine. And I am a little bit worried on the market side, what happens from the Ukraine conflict. I'm much more worried if China and right now looking at it says, oh, that's it? They just cut me off SWIFT? I don't care. I always wanted to snag Taiwan. Let me snag Taiwan. Yo, Simon, what's the reason for the current climb in Luna, says Andreas Fromberger. There is no real reason, Andreas, but there has been some Luna problems. like Solana, Luna and Solana, our two favorites of the last weeks, were in the midst of really serious problems over the last weeks. Liquidity problems on the Luna side because of many things. But short story, 3 weeks ago, nobody knew if Luna would survive because of a very acute, very urgent liquidity problem, because of one of the scams going on in a related ecosystem that created a liquidity problem on the UST side. So on one side of Luna was really, really in danger. Now they solved it, and that was a breather for the world. And not only they solved it, but Luna has, first of all, a very small but very huge upside, small probability of upside, but the upside is at 10x from here. So from 94, it could theoretically 10x, and this is exciting many people. Low probability. Let's make this short. I think the probability is 3% of Luna going to 1,000. But those 3% excite many people, including myself. And so we're watching that. And as we watch it, it has some momentum and amplification effects because Twitter is talking about it, and that amplifies itself in terms of sentiment. Now, sentiment we shouldn't take too seriously. But if you look at Luna, there are still some problems with Luna. For example, I don't see a lot of adoption of UST outside the Luna ecosystem, but there is a use case which is incredible. So one of my theses for 2022 and 2023 is interoperability. Right now, as a user, you experience MetaMask, you experience the Phantom wallet, and you go, oh gosh, I have to switch this into that and then click there and then I have to deposit there. People don't want this. So the next step in crypto evolution will be simple for the user. That is like you are using Twitter or Instagram. You just click and it works. This will be the user experience. Now, on the technical side, what does it mean for the blockchain space? Interoperability. And so we had some problems with bridges. They are very fragile and they got attacked and they couldn't defend themselves. So bridges are really fragile right now. That's why the interoperable chains will have a strategic advantage. Things that ecosystems that can show that they work interoperably will win. And there are not many of them. Luna is one of them because it has a perfect chain. If you look at Anchor, Mirror, Terraform, and Luna together, it's a whole ecosystem fully interoperable. So it's one of the use cases for the future. Low probability of success, but it has shown that it works. And if there is adoption and if they can defend from political risk, well, that's the future. So that's one reason. And then there are many that we don't know. But they have survived the liquidity crisis. They have a wonderful use case. They excite many of us. There are wonderful projects going on in the Luna ecosystem. And yeah, the community is small but excited. And we are also excited about Luna. It's in our top 10 since a very long time. And we have stayed with Luna during the FUD of the last weeks. Luna and Solana were really under attack over the last weeks. They did really, really well. So congrats to you who were still on the fundamentals and not on the news side of things. What else questions do we have? Let's go to Jane's question, because Jane asked, hey Simon, what about long-term Bitcoin projection and its possible function as a hedge against inflation. Can Bitcoin really be a hedge against inflation? How much percent of the portfolio would it be? And what makes us think that it is so? Now, in here on the channel, we do the 10 steps fundamental analysis, then we do the macro check, and then we do the TA check. Now, this week also, Bitcoin has bullish signals on all of them. The adoption is good. We are now 40 million people using it, and it's growing every time. We have seen that under the biggest uncertainty, the last 3 days, Nasdaq down, Bitcoin up. We have seen the value of Bitcoin rising. What's the value versus the price? The value is the hash rate, the adoption, and the network effect. The price, it's just the price. The price is just sentiment from what the newest thinking about it. But the value is really what you can see in the hash rate. And the hash rate is at all-time high. Now, when we see Bitcoin long-term, I have put together some predictions from the 15 people that I find most precise when they predict. And I've put together a price for 2023 to 2037 based on the average of those predictions. Now, I have not counted people like Michael Saylor or Robert Breedlove, who are at 12.5 millions a Bitcoin, because I think they are just very, very biased. I took the people who are in between. So I took JP Morgan, which says 2022 December, we will have a 650,000 Bitcoin. Tim Draper, 250,000 2022. Mike Novogratz, 65,000 December 2022. Katie Wood, 500,000 in 2025. Bloomberg Mike McGlone, 170,000 2022. Max Kaiser, 400,000 2023. Now, the average of the 15 that I picked would say now that 2023, 374,000. 2024, 418,000. 2025, 451,000. 2026, 476,000. 2027, 490,000. 2028, 511,000. 2029, 526, and upwards we go up to 2036 with 632,000, 2037, 647,000. Now, if you look at this progression and this appreciation, and think of the debasement depending on your country. So in the US, we have a CPI of 7. Oh, let's do the 10 steps. Cool. So in the US, we have a CPI of 7.5 percent, consumer price index. So you have to think of this 7.5%. Australia, where Johan and Jane are, has a lower CPI, the consumer price index. I don't have it top of mind, but it's much less than 7.5, it's something around between 4 and 5%, if I'm correct. Johan, if you know the exact, let me know. Australian consumer price index. And then where Andreas lives, Austria, we have it also much, much lower. It's also around, I don't have it top of mind, but it's also around 4% CPI. So depending on your country, make the calculation. But on average, across all countries who are all slightly inflationary, globally, I think if you have 5% of your overall portfolio in Bitcoin, so of your overall wealth, okay? When I say portfolio, I mean real estate, stocks, cryptos, cash, okay? If you have 5% of your overall portfolio in Bitcoin, in most countries over 10 years, you have a high probability of hedging against inflation, because the appreciation of Bitcoin will help you buffer down the depreciation of the other things that you hold. Hope that answers your question, Jane. And then Nick, the casual guy. Hey, Simon, did you hear about Metaverse 2.0 news today? I heard a lot. Which one do you mean, Nick? I heard a lot of news today. I take news with a grain of salt, and I try to filter here only the one that are really, really evergreen relevant for you. And I will tell you why. I reduced the number of the news that I check every day. And by the way, let me share with you one very cool thing that I found in terms of news. There is this thing that aggregates the news for me in a non-emotional, non-exciting way, because I think that news, especially mainstream news, they are measured against one KPI. Being it TV or radio, their KPI is how much attention do they grab. So they are not here to inform you. They are here to emotionalize you, to grab your attention. And so I reduce the number of these things. I prefer to do my 10 steps that Johan wants to check. Okay, let's do it together. And I prefer to do my fundamental analysis and then my small macro check and my small TA check for the few strong horses that are in our top 10. And I read the news, but only here. What is this actually? What's the name of this thing? It's called Cryptopanic. And it's basically just an RSS feed collection of all the headlines in the crypto space. And so this is what I read every day. But as you can see, it's very simple. It's non-emotional. It's not catchy. There are no graphics of something burning or whatever stuff going to the moon, because I don't want that. I don't want to be emotionalized. I want just more data, more data points to base my decisions on, right? So let me share with you what changed from the last. But Nick, hey, let me know which Metaverse 2.0 news you wanna go deeper in. I'm happy to go there. Right now, Metaverse is something that I don't touch. I am analyzing it, yes, every day, and I will share with you opportunities as soon as they are here. Right now, Metaverse is more risk than reward. I'm very positive it will change soon. But right now I'm buying energy, I'm buying Bitcoin, I'm buying gold, I'm buying silver, and I'm buying fertilizers. That's what I'm buying right now. And let me share with you what changed in my portfolio since the last time. By the way, new sounds with it. So, my portfolio has some changes, some rebalancing. If we go to the stock portfolio, this was just blue and green, growth stocks and digital assets. Up until January. So when we say growth stocks, it's 22% Alphabet, 25% Amazon, 10% Tesla, because we sold a lot when it doubled again. And then I have added a position in Shopify 5% and Nvidia 3.4% as they were at a nice price. I've added SoFi when they were at a discount, and these are all growth stocks. I always had Block, former Square, 6.5%. PayPal is associated with growth stocks, even if it's a value stock. MicroStrategy, I count as a digital asset. It's obviously a growth stock, but it's a digital asset in my categories. And same as CleanSpark, I don't count CleanSpark as an energy stock. I count it as a digital asset because the whole value of MicroStrategy and CleanSpark is that they hold Bitcoin in their balance sheet. That's it. And then we have CRISPR, who is the worst pick I ever did. I was listening too much to Katie Wood and not enough to my own calculations. You live and you learn, right? So that's down, I think, 60%, and I don't know how to get out of that. So digital assets I have now with 17.4%. And commodities, I've added commodities, 2.4%. I never had commodities, but I've bought 3 gold producers, 1 silver producer, and 2 commodities-based ETFs. I never buy ETFs, as you know, but in the commodities, I'm no expert in commodities. I have no idea which one are better, which copper producer is better than another copper producer, and I find it also very boring to look at copper producers and to do the fundamental analysis there, and the charts there are so boring. So I just bought a basket of 2 ETFs based on commodities. One is put together by BlackRock, and one is put together by Lixor. Yeah, Lixor, I think. So I've analyzed 10 of them, picked 2. And I've also picked 3 single stocks of gold producers. If you want to know which they are, I'm going there, let me know. And also 1 silver producer. I've also added to my positions of energy stocks, and mainly dividend stocks energy, because as you can see here, I'm all growth stocks, 78%. That's a little bit overexposed. And I am very, very underexposed dividend stocks, 1.7%. So my goal for the next weeks is to increase my dividend stock percentage and the ratio of dividend stocks compared to growth stocks. Why? Because the segment rotation is clearly, since January, is clearly from risk on to risk off. And for most people, and these are the markets, are the people and how they feel, it's moving from growth stocks to dividend stocks. So that will a little bit de-risk my portfolio, because I am now in an age and in a size of portfolio where preserving capital for me is more important than building wealth. So I'm now in the preservation stage of things, and I have to change that. I have also 3 kids and want to reduce the risk, as you can imagine, because it's for them. It should be around also in 20 years. Then, that was the stock side of thing. If we look at the crypto side of thing, that's unchanged. I'm still store of value, 56%, that's Bitcoin. I'm into smart contracts, still 39%. That's the Ethereums, Solanas, Luna, and Avalanche, and Phantom. And then I'm 2.1% in Web3 and Metaverse, which explains you now why when I see Metaverse news, I don't really care, because I have no exposure right now, and I don't want anybody to be very exposed Metaverse right now, because it's not the moment. It might be in a couple of weeks, and so I'm watching it closely. And there have been some opportunities over the last weeks to snag some sandbox, to snag some engine, but I'm not completely sure. I did not buy any sandbox December. I sold my sandbox in December, my Decentraland and everything Metaverse. I sold it in December, and I'm watching for clear trends upwards. As soon as they kick in, I will buy, and I will tell you what I'm buying. But right now, so yes, there are a ton of news, but they need to show me some real numbers, some real results, and they are not yet here. So there is a lot of excitement in there, but zero reason to enter for me. What else was really interesting this week in terms of risk management, right? I have been looking at the 10 years treasury rates, at US corporate tax rates, geopolitical risks, commodity scarcity, and equity overvaluations. That's the reason why I'm slightly reducing my growth stocks exposure to dividend exposure, because, of course, equities are overvalued. On the other side, what can the Fed really do? I don't think they can do much. I think equities will still do well. So in terms of risk reward, Bitcoin number one, then I have Solana, then Ethereum, then Avalanche, then Phantom Luna. Luna has grown much bigger than Phantom meanwhile because they doubled. And I still hold Engine, but I might swap it over the next weeks. I always compare it and I swap it, and all the profits go back into Bitcoin in this portfolio. In this other portfolio, my biggest one are Google, Amazon, Tesla, Nvidia, as you've seen, and I will switch Coinbase and CleanSpark and SoFi and all these risky, volatile plays back into Google, Amazon, and Tesla, and Nvidia, and Shopify as soon as they create profits. I've updated my buy list and my sell list, and that's mainly what I've been doing. And I've been sharpening my scenarios. You need scenarios: base case, offense case, defense case, and so I've sharpened it. I've been thinking about the drivers. What are real drivers for the scenarios? And I've picked two that are very different from most people right now. Most people are looking at the CPI, and I'm not so much. I have picked two that, from my perspective, are bigger drivers. That's demographic shifts from boomers to millennials, and how they will wanna invest. And I'm looking at productivity, especially driven by technological shifts. So my main assumption is that we live in a credit-based economy that is dependent on increasing leverage to generate political and socially acceptable rates of economic growth. So the Fed needs to pump. Real interest rates determine how cheap or expensive economic agents find the new credits to be. That keeps the economy floating, and what is the job of the Fed is to keep the economy floating and to keep people from not going down the streets to protest. And the real interest rates, they were in a secular declining trend centuries before the Federal Reserve or other central banks were even established. That's because the most important drivers of long-term real yields are to be found in demographics and productivity. And now I've been looking at real interest rates. This is from the Bank of England, and you can see that even before the Federal Reserve was created and installed, there has been a decline in real interest rates. But that's maybe too much of a macro thing. Let's cut to the conclusion. So my drivers are demographics and productivity. My base case, and I am still in base case, is slow growth. Offense case would be fast growth. I don't see that for this year. Defense case would be a recession. We will definitely have recessions in some countries, like Russia will be in a recession this year, that's clear. But I don't think the world is in a recession. I think we are still in base case slow growth, unless China invades Taiwan to get to dominate semiconductors, which I would do if I'm China, but don't tell them. And if they don't, we stay in base case. So in base case, I want to be 35% stocks, 35% crypto, 20% real estate, and 10% cash. And that's exactly what I am at right now. And in stocks, I want to be aware of the rotations, right? That's why I showed you the percentage of digital assets, of dividend stocks, of growth stocks, and the assumptions and the areas that I bet on. Now, if we would move to a recession, I would want to increase my real estate to exposure to 40%. That's apartments, buildings, land. And I would like to decrease my stocks, especially the growth stocks, to 10%. And in stocks, I want to have more fertilizers, more food, agriculture-related things, because these are the basics that even in a recession, you need some potatoes, you need water, etc. So that's where I would go. And I would reduce crypto to only Bitcoin and have that as a 20% thing. Maybe some Solana, but I guess in a recession, Bitcoin. And 30% cash, and have it in the safe. So that's the thing. Metrics that I'm looking at, because when you do scenario, so do your scenario, do your base case, offense case, and defense case, and define what will tell you in which scenario you are, in which case kicks in. So metrics, for example, I am looking at the 5-year yields, that's the real interest rates. I'm looking at the volatility index, the dollar index, and the consumer price index. These are things that I'm looking at. And if they get to certain thresholds that I'm watching every day, then I need to switch gears from base case to defense case, for example. Unfortunately, we will not see offense case this year, 2022, but I'm ready for it whenever it kicks in. So hope that helps. We are now at 37 minutes, which for this format is really, really long. If you are new to this channel, what do we do on this channel? So it's about your revenue systems and investment systems. The revenue systems, by the way, you can really get from this book, Strategy Sprints, 12 Ways to Accelerate Growth for an Agile Business. And we deep dive into some of the 274 tools of the Strategy Sprints method on this channel. So how you can make your sales more repeatable. And then on the investment systems part, how you keep that, we look at 3 things. Mainly, we do fundamental analysis, the 10 steps that we use to make fundamental analysis of stocks and of crypto assets. That mainly focuses on the use case, the function, does it solve a problem? What about liquidity? What about growth and compound growth and network effects? And defendability that comes with network effects and having a moat. It is subjective, but it is future-oriented. Then we do a macro check. It's a small check. It's half an hour, just checking macro, demographic shifts, as we discussed. Shifts from boomers giving their wealth to millennials. How will millennials like to invest? Will they buy gold or will they buy Bitcoin? And productivity rate, real interest rate, consumer price index, as we just have discussed, that's the macro. That's looking at the economy. The positive thing is that you are aware of segment rotation and you can de-risk and use opportunities quicker. Negative is, for example, Warren Buffett says, never care about macro. Don't care about the economy. Care only about fundamentals. And he has done really well with that strategy. Still, I think it's important in terms of timing and entry points. Technical check. It's not a deep technical analysis, but of course we do a quick technical analysis every day. We look at Bollinger Bands, relative strength, directional trend, moving average, MACD, and then the cool thing about this, it's objective, it's numbers, but it's numbers about the past, and the past is not indicative of any future in investments. So that's what we do. Keep subscribe and like if you like it. Keep subscribed so that you are in the loop, because I will update you about what I buy, what I sell, and the segment rotations coming up. Metaverse will be big this year, and I am researching, but I'm very conservative, and I only show you opportunities when I am going in myself, and when I am quite confident, because at least 8 of the 10 indicators are shooting at once right now. All right, keep rolling.